Dear professional friends, welcome to third episode of weekly GST updates. We are excited to see overwhelming response to our videos. We got many queries during last week, so watch till end to get replies of queries. This week we have only one notification, that is notification number 05 of 2024 dated 30th January 2024. In this notification, CBIC added one entry number 411069 to the principal notification number 02/2017 of dated 19 June 2027 for territorial jurisdiction of Principal Commissioner and Commissioners of Central Tax. Now we have to look at the major case laws of the week. So first case laws for the discussion, for today's discussion is a recent ruling by Bombay High Court in case of Nutan Warehousing Company Private Limited versus Commissioner of CGST. This case was decided on December 11, 2023 and reported in NTN 2024 version 84 on page number 117. It revolved around a very specific question: is tea a agriculture product, and the specific exemptions given to why a specific notification number 12/2017 Central Tax is applicable to this, which gives exemption to tea as an agriculture product. The court observed that tea, being a product cultivated in tea garden and meat for human consumption, retain its character as an agriculture produce even after processing like blending or packaging. These processes do not change the essential nature of this being an agriculture product. The court referred to very famous Supreme Court cases of DS Beast and Belsun Sugar Company Limited. These cases, they use as a precedent that processing does not affect the fundamental nature of an agriculture product. The respondent argued that a clarification was issued by department in 2017 stating that the tea stored in a warehousing should not be considered as an agriculture product and no exemption should be given. The court disagreed with this argument and stated that such circular cannot override or nullify the exemption notification. It emphasized that the government has the power to grant tax exemption on certain services, and in this case, service referred to agriculture produce like tea were exempted from GST. In conclusion, the court found clear legal error of interpretation and ruled in favor of Nutan Warehousing Company Limited, allowing the exemptions of GST on warehousing etc. for tea, affirming that tea indeed remain an agriculture product even after certain processing like blending and packaging. This decision is significant for business involved in storage and processing of agriculture products, and it's clarify the scope of GST exemption in such cases. Second case law for discussion is about a key decision by Patna High Court in case of Vishwanath Iron Store versus Union of India, decided on October 6, 2023 and reported in 2024 NTN volume 84 at page number 156. The main question here was about GST and ITC, specifically whether the railway should issue a corrected invoice for sales that has happened in 2017. The issue was about a transaction initially treated as intra-state sale, which the petitioner later wanted to be considered as an inter-state sale. The change would impact the GST applied and ITC claimed by the petitioner. The court noted that the goods were delivered in Jharkhand and were considered a local sale. If petitioner wanted this to be an interstate sale, then this should be specified at the time of the supply. But there was no evidence that the goods moved out of Jharkhand to Bihar, which is necessary for an interstate sale. Furthermore, the court highlighted that tax already paid is CGST and SGST and could not be retrospectively considered as IGST. The transaction could not change the nature of tax liability after the fact and after the completion of a transaction of supply. Importantly, the court pointed out that invoice in question was for the year 2017 and 18 and the petition was filed in 2021. As per section 16 subsection 4 of GST Act, the claim for ITC should have been made by November 28, 2017 or with the annual return of 17-18, whichever was earlier. By 2021, it was too late to claim this credit. In conclusion, the court found out no reason to direct railway to issue a revised invoice and did not permit change in the nature of sale or the ITC claim in this case. Third is an interesting case decided by Delhi High Court on August 22, 2023 and reported in 2024 NTN volume 84 at page number 165 involving Boks Business Services Private Limited and Commissioner of CGST Delhi South. The core question was whether Boks Business Services Private Limited could be classified as intermediary under IGST Act for the service it provides to its clients. Here is the crux of the matter. Boks Business Services Private Limited provides services like bookkeeping, payroll, accounting, the normal outsourcing services using cloud technology to its foreign affiliates. Boks Business Services Limited, the court decided if this service can be classified as an intermediary. An intermediary in GST context typically mean a broker or an agent who facilitate the provision of services between two of the entities and they are not the principal service provider. In this case, Delhi High Court observed that the Boks Business Service Private Limited was not an intermediary. Why? Because they were not just facilitating or arranging services for another entity. Instead, they were the primary service provider. The fact that the company used the word agent in their agreement does not change their real nature. They were directly offering bookkeeping, payroll, and accounting services. Therefore, the court ruled out the previous order considered Boks Business Services Private Limited as an intermediary were incorrect. These orders were set aside and the court directed the adjudicating authorities to process the company's claim for the refund as quickly as possible, preferably within 4 weeks. This decision is significant as it clarifies the distinction between an intermediary or a principal service provider under GST framework. Fourth case is a significant case of Allahabad High Court relating to Ashish Kakkar versus Union of India, decided on 13th July 2013 and reported in 2024 NTN volume 84 at page number 142. The main issue here was about granting bail to the petitioner Ashish Kakkar in relation to GST matter. Ashish Kakkar was taken into judiciary custody by department for GST related allegations. However, the department did not request further interrogation while he was in custody, indicating that they might not need the further questioning Mr. Kakkar. Kakkar also assured that he would cooperate fully with the investigation and not hinder it in any way. An important point the court noted was that the arrest memo was unclear about the specific offences committed by Kakkad. It mentioned various clauses of section 132 of GST Act but did not specify which one he alleged violated. Considering these points, the court found that Kakkad had made a strong case for bail. They ruled that he should be released on certain conditions such as cooperating with the investigations, not trying to influence witnesses or tamper with the evidence, surrendering his passport and appearing into court whenever required by the department. The court set aside the order and court set the bail at rupees 1 crore with 2 sureties of the same amount. They also instructed Kakkad to follow several conditions like not leaving country without court permission and being present in the court on important dates, and emphasized that any violation of these conditions could result into cancellation of his bail. This decision highlights the court's approach of balancing rights of an individual with the requirement of ongoing investigations in GST related cases. Last and the fifth case for today's discussion is from Delhi High Court involving Global Real Infra Private Limited and Additional Commissioner of CGST Appeal 2nd. Decided on 17 February 2023 and reported in NTN 2024 volume 84 at page number 192. The case focused on two major issues. First issue, principle of natural justice in appellate proceedings. Global Real Infrastructure Private Limited argued that appellate authorities' order violated the principle of natural justice because they were not present in the hearing. However, the court observed that the appellate authority has given them multiple opportunities to be heard. Despite this, the company did not participate in the hearing. The court found that expecting the appellate authorities to agree to repeated request of adjournment was not reasonable. Hence, the claim had no merit. Second issue in this case was GST liability on terminated lease agreement. The second issue was whether Globus Real Infra should pay GST on a lease that was terminated due to resolution plan. The NCL had sanctioned a resolution plan which ended the memorandum of agreement of lease from April 1st, 2015 with no liability on BSL to pay lease rental. Globus Real Infrastructure argued that as the original lease agreement has been terminated, there is no supply and hence there should not be GST liability on that. The appellate authority had not considered this argument. They assumed that services were supplied and accordingly decided the GST liability. The High Court decided to set aside the order of the appellate authority. They sent matter back to them to reconsider Globus Real Infrastructure's argument about lease agreement and pass a new order after giving them a reasonable opportunity of being heard. These decisions are important as they clarify how principles of natural justice apply in appellate proceedings and how GST applies in case of terminated lease under resolution plan. Before we take queries for this week, let me update you about interim union budget presented by Honorable Finance Minister Nirmala Sitharaman. There's nothing considerable in this budget regarding GST as this was an interim budget. So we are coming back to the queries. We have got good number of queries this time. So the first query that I want to take is from Ashok Kumar Gupta ji from Varanasi, and he wanted to know the return filed late with the late fee, an assessing authority imposed penalty under section 125 of GST. So what is 125 of GST? Any person who violate a provision of the GST Act or rules established thereunder would be subject to a general penalty under section 125, and the amount has to be, the highest fine in this case can be rupees 25,000, and the officer has the right to impose a general penalty if the return is filed late. There's another query which says goods accompanied with e-way bill but generated e-way bill but the part B was not updated. The Allahabad High Court in Rawal Vasai Yarn Dyeing Private Limited case recently on 16th January 2024 held that if invoice accompanying the goods with half-filled e-way bill has full detail of vehicle on that invoice, then not filing of part B of e-way bill is only a technical error without any intention to evade tax. The court quests the penalty order under section 129 subsection 3 of UP GST Act, and this case law of Vasya Yarn Dyeing Private Limited is reported in NTN 2024 volume 84. We have got another query where the person asked us to suggest ruling and legal position of section 129 subsection 3. 129 subsection 3 suggests the proper officer can detain or seize goods or conveyance and shall issue a notice specifying the tax and penalty payable, and thereafter pass an order for payment of tax and penalty under clause A or clause B or clause C. Clause A, B or clause C deals with monetary amount of tax and penalty. We request whoever want to send the queries need to send the query with very clear written questions so that we can take them and explain them for the benefit of everyone who is watching this video. Thank you for watching. Don't forget to subscribe to get the weekly update on next week's video. Keep agile till the next Friday for the next video. Bye bye.